Hello traders, welcome back. Welcome to Forex Mechanics, and in this video we are going to be talking about the currency strength meter. Now I am sure that all of you must have come across some of the other currency strength meters. Some may be paid, some are free, but irrespective, until and unless you don't know certain things about these currency strength meters, it will not really help you in your trading. Now, like you all know that I keep talking about currency strength and weakness. Even before we get into the currency strength meter, let's just spend a few minutes on the currency strength and weakness part, and then we will go into the currency meters. Now, as you know that when you're trading Forex, you should be analyzing individual currencies and not currency pairs. What I mean by this is that you need to know that any given month, which is that currency which is really driving the market, and that is the currency that you should be trading. So, when you really started off trading Forex, you must have been told that, you're only supposed to trade the euro dollar or the pound dollar. But as long as the euro dollar, as long as you're trading the euro dollar, but, in case if you're buying the euro dollar, and if the euro and the dollar are not moving against each other, you can't really make money, right? So always remember that it's all about currency flows. So you need to spend more time understanding currency flows before really placing your trade, right? So now, when we talk about currency strength and weakness, like I mentioned, that everyone really talks about currency pairs, right? You've been told to trade euro dollar, pound dollar, dollar yen, so on and so forth. But unfortunately, everybody talks about these common pairs, but no one really tells you that what is the actual logic behind it. Correct. So unless and until you don't know that, it's really pointless looking at the forex market, right? So here we're going to look at some examples. So here you can see this is the pound dollar, right? So what I've marked is the winning months and the losing months. Now this is just the daily time frame with two moving averages, and I'm just looking at the market as a whole, just overall, and telling you which could have been not great months to trade. So here you can see the month of Jan and in the month of Feb, right? So if you can see the month of Jan 2020 and Feb 2020, price was not really doing anything. Here you can see these 2 months here. Price was not really doing anything. It was in a tight range. So that's the reason why, had you been only looking at the pound dollar, there are chances that you would have lost money. But then in the month of March, there was this nice short opportunity on the pound dollar. So if somebody who was only looking at the pound dollar and he's not looking at the currency strength and weakness as a whole, then in these 3 months he would have had, the trader would have had profitable month in the month of March, but Jan and Feb would have been losing months. So these 2 months, you could have avoided, provided you were tracking individual currency strength and weakness. I am sure that there would have been some other trading opportunity elsewhere, but not on the pound dollar, right? So here are some more months you can see in the month of April. But again, when you see uh, the month of July would have been a great month for pound dollar. You can see very nice steady moves on the pound dollar, which clearly indicates that maybe the pound and the dollar were moving against each other. The pound was strong, and you would have made some easy pips here, right? So if you're a trader who's only looking at the pound dollar to trade, then there have been certain months which would have been really good, but then most of the months would have not been great months to trade. Here is the Australian dollar, US dollar. Now we all know this. You can see this is this is April, Jan to March 2020. You can see clear downtrend. So you would have been selling this pair. This is precisely because the Australian dollar was weak. And then April 2020 onwards, the Australian dollar was strong. So you had the currency pair move up, right? So if somebody, is focusing only on the euro dollar or only on the pound dollar, would not have had that great results compared to a trader who's looked at currency strength and weakness and was trading the Australian dollar US dollar. So someone who was selling Australian dollar US dollar instead of some other pair would have had much more consistent results compared to somebody who was just looking at one or two pairs, right? This is precisely because the Australian dollar was selling, and then Australian dollar went on to this buying spree, and that's when from April 2020 it started to move up, right? So these are some examples which clearly, so here is the Australian dollar index. You can clearly see the Australian index first 3 months of 2020 just kept dropping. Here you can see it just kept falling down, and then from April, price started to move up. Right, so it clearly shows that had you been tracking individual currency flows, then you would have been in a much better position to see what the currency is doing. So here you can see this is the US dollar index. Here again you can see from May 2020 right until August. So just end of May, May until the mid of June, and again in July until August. So these were 3 months where the dollar was really weak and the Australian dollar was strong, and hence the Australian dollar US dollar was a good currency pair to look at. Right? So, I mean, we can just keep going on and on with examples, but it's very clear now. Here is the pound index. You can see very clearly just by looking at it. If you compare this to the Australian index chart, you can see there was this pound index was not doing anything in the month of Jan and Feb. See, there's nothing really happening here. Right? It was in a range, then it eventually broke out, and there was a sell-off. Then again in the month of April, there was nothing happening. So you can see overall it was mixed, right? So you can just by looking at it, you can see compare the pound index to the Australian index. Australian index had a much more smoother move compared to the pound index. Here is a similar example of the euro index. You can see how Jan consolidation. Here again you can see August, September, October. Not a great month to trade the euro dollar, especially if you're looking for trends. Then this would not have been a great month for you to really look at trends, at least in the euro, right? Because you are supposed to be trading that currency when there is a trend or when there is actual movement happening on that currency. So it was very clear here that there was nothing happening on the euro, at least in August, September, and October 2020, right? So somebody who has access to light forex charts can obviously just keep going through these charts. There are numerous examples that you can go through, and which clearly shows that tracking individual currencies makes more sense than tracking currency pairs. Now here's the euro index. Here you can see again a period of consolidation. So you can see anybody who traded euro in the month of July, there was a nice clean trend. So anybody who was buying the euro dollar in the month of July would have had decent results. And so for that matter, even in the end of May until early June, right? Now, these things basically tell you that whenever there is currency flow happening into a specific currency, or when there is buying or selling happening into a certain currency, it makes logical sense to place your trades in that currency, right? So here is a simple example of a euro dollar. Now, what does a currency strength meter do? It basically tracks. Now, a currency strength meter is basically not an indicator which tells you to just buy and sell. It's simply a reference, it's a guide which tells you where buying and selling is happening. That's all it does. It is not something, just because you see that there are two currencies which are at extreme ends and they are moving against each other, that doesn't mean you simply go and, buy or sell that currency pair. It simply tracks currencies, and it tells you that whether this given currency is strong or it is weak. Here you can see the pound index. This is the most recent one. This is 21. So here you can see from Jan 21 till Feb 21, pound was clearly gaining in value. There was a nice trend that was formed in the pound. So it would obviously make more sense to buy the pound in the month of Jan and Feb. And flip side, you can see how the Swiss franc was dropping. So in the same month, so it would make more sense. So you can see here pound was going up, Jan and Feb 21, Swiss franc was going down. So it makes more logical sense to really go ahead and buy the pound CHF, as you can see here. Right now, what you need to really know is that, so let's say if you're trading off moving average cross, right? So whenever there's a cross, you are looking at buy. So if the cross is in the bullish direction, you're looking for a buy. If the cross is in the downward direction, you're looking for a sell. Now, in this case, when you know that the pound CHF, there is a crossover happened, and then you wait, and eventually you see that on that currency pair, there's a trend that is eventually being formed, and at the same time, you can see that the two currencies that are involved in the currency pair are really gaining. So in this case, when there is a crossover that happened and price started to move up, and you saw pretty early in the trend that the pound was really gaining in value. What you can see here, pound was gaining in value. This is the pound index, and the Swiss franc was losing value. So that gave you enough hint that it makes more sense for me to buy the pound Swiss franc. So you would have had that opportunity in the month of Jan, or you would have had that opportunity in the month of Feb as well. So here you can see that eventually it just took off in the month of Feb, right? So it's not just simply trading crossovers or breakouts or any possible strategy you're looking at. If you're simply even looking at moving average crossovers, what you're looking for is that not simply buying or selling at a crossover. You are basically going to take out time to see that after the crossover, is it eventually getting into a trend, and the two currencies which are involved, are they really, is there enough buying and selling pressure on those currencies which will eventually push that currency up, right? So here, there's another example. This is the Australian dollar. Now, this is an example I've taken it on purpose. So here you can see from August 19 till early 20. This is the Australian index, right? So if you're looking at the Australian index, you can see on the daily chart there was no clear trend as such, right? So uh, honestly, as a trader, at least for somebody who's trading off the daily charts, it would not make a lot of sense for you to really look at the Australian index, at least because there was nothing really happening on this currency, right? So it would obviously make more logical sense that you look at, some other options. So like I mentioned, even in this case, because I want to keep this video simple and I don't want to get into, uh, you know, any deep discussions on strategies. All I'm saying is, let's say if you are simply trading moving averages, right? So in this case, I have two moving averages. Let's say you have let's say you have 8 EMA and the 20 EMA on the daily time frame. You've seen a crossover happen. You see that eventually that the moving averages start fanning out and they move in a certain direction, and there's a trend being formed. And pretty early after the crossover, pretty early in the after the cross, when the trend has just begun, you can see that the currency which is involved, there is enough buying and selling pressure in the two involved currencies. Then it would make more sense for you to sell or buy that currency, right? So here you can see the Australian dollar start. There was a sell-off that happened, right? People were selling the Australian dollar, and that selling pressure kept increasing. Now, as and when it kept increasing, and you saw that you were pretty early in the trend, and you've seen or you've identified Australian dollar, US dollar, and you've identified pretty early in the trend, then it would make more sense for you to sell that currency pair, right? So even when I look at currency strength meters, now let's talk a little bit about the currency strength meter. So here you can see this is a currency strength meter. Now this is something that I use. Now here you can see this is basically tracking currency strength and weakness across the time frames of your choice. Now in this case, I'm using a shorter term time frame. I'm using the last 3 days, and I am also using something which is very recent, which is the last few hours. I'm tracking currencies strength and weakness on this in the last 12 hours, and simultaneously I'm even keeping a track of the last few days. Now, what I've observed, what I noticed is that if I say take a simple example of a crossover, right? Here there is a crossover on the New Zealand dollar, US dollar. I am simply tracking the 9 and the so here's the 9 moving average. So I'm simply tracking two moving averages. There is 9 and there is 30, right? And these are the two EMAs that I'm tracking. Now, so here is when the moving average really crossed, right? So this is the currency pair. This is the New Zealand dollar, US dollar. This is the currency pair where the cross really happened. And around here, you can see this is where the cross happened. And this, you can see this point here. Let me just make it a little big. Just give me a second. Yeah. So here you can see this currency, the last time there was a strong trend was in the month of November, right? So this was November 20. New Zealand dollar, US dollar started to move up. Then it hit into a range. This was this final move up, and then it dropped again. So this point here, right? This point right here, and this point right here, right about here. So this for me was like the most recent levels of support, and any break from this level would basically trigger a sell-off. Now, even before I really get into support or resistance, I'm simply looking at the moving average crossover. So you can see here when these two moving averages crossed back then. Now this is tracking it in real time. Okay, this is tracking it in real time. So you can see this price action that you see today. This is when the currency pair, this is when the New Zealand dollar really went on under a heavy selling pressure today, and I was tracking this cross. So when I know that there was a moving average cross, so I am looking for a sell opportunity. Now that sell opportunity is only going to come when I know that the New Zealand dollar, if I am selling the New Zealand dollar US dollar, then I want to see some selling pressure on the New Zealand dollar. Now, today, what happened is this is in the last 12 hours. I could see that the readings were just constantly changing. This was, start of the day, and I saw that the US dollar was gaining momentum and the New Zealand dollar was losing. This was on the shorter time frame, and at the same time on the longer time frame. Here you can see this is the last 3 days. So you can see here this is the moving average cross, a simple moving average. So these are just two exponential moving averages. I'm simply looking at a cross. This is somewhere here is when the cross happened on the 10th of March. Then after that, there was a period of consolidation. There was nothing happening for almost a week. But this was the level. You can see this level here, and this level here, which was acting as support. And a break from here would trigger a sell-off. Now, along with the moving average crossover, you can see here these are the two currencies. So you can see the green line is the dollar, and the line in purple is the New Zealand dollar. So it was very clear that there was a moving average cross, and obviously I'm not looking at an entry, but at the same time I could see that the moving average, the individual currencies have started moving against each other. And it's only today that there was this breakout that happened, and eventually the selling pressure started. But the hint was given since a few days when there was a crossover. After the moving average crossover, you could see that this is the moving average cross. You can see both the currencies have started to kind of move against each other, and today eventually it just dropped. So what does this indicate? Now, this is simply because I was tracking this currency. But let's say you missed this breakout. What is eventually going to happen is this is still very early in the trend, and you can see that both the currencies are moving against each other. What is going to happen is that maybe this will continue to go down further tomorrow, and maybe in a couple of days retrace a little bit, and then maybe you could look at a pullback entry. Correct? But what I'm trying to say is that currency now, if you look at the currency strength meter here, you can see this is the last 3 days, and what triggered my entry is that on the shorter term time frame, I could clearly see today is when the New Zealand dollar really started a sell off. You can see this here. New Zealand is the weakest, very clearly the weakest. You can see all the move, all the selling was happening on the New Zealand dollar, and on the other side there was some strength on the yen and the dollar, right? The yen and the dollar. When I go down, this is on the 8 hours and 12 hours. Here, this is in the last 3 days. You could see New Zealand is clearly the weakest. Here again, it's very evident. New Zealand is the weakest. You can see it's minus 38. The second in the rank is Swiss franc, but you can see the difference. But it clearly tells you that the New Zealand was the weakest, and this weakness has started today. Why? Because I am tracking currency strength and weakness basis a moving average cross. So the crossover happened. That doesn't mean I simply go and sell. After the cross, I am going to check and I'm going to patiently wait to see if that involved currency is really going to have that kind of selling pressure or buying pressure to really for me to look at an entry. So today, when I clearly saw that the New Zealand was clearly losing value, and the dollar was gaining value, and when I saw it, here it is pretty clear. You can see this is on the shorter term time frames. This line, the purple denotes the New Zealand. You can see how this was today when New Zealand just simply continued to you can see this purple lines here. They started to move completely against all the other currency pairs, which clearly denotes that New Zealand is under heavy selling pressure. So I need to be selling the New Zealand, right? So New Zealand was clearly the weaker one, and the two of the best options I had was to pair it with the dollar and the yen. But you can see here yen was strong on the shorter term time frame, so was the dollar. But when I go into the last 3 days, I could clearly see that dollar is a contender for the dollar is getting strong in the last 3 days, and it is also getting strong today in the last few hours, right? So for me, dollar was a common currency. So here you can see yen is obviously gaining value, but in the last 3 days, if I look at the yen, there is still some weakness in the yen. So for me, of course, the New Zealand is what is driving the market, but it makes more sense for me to really pair it with the New Zealand dollar. Now here, if you look at the individual index, here's the US dollar, a crossover that happened early this month, and it looks like it's going to continue this move in the upward direction. And if you look at the New Zealand index, you can see this is today. The drop has just started, and it clearly was visible on the shorter term time frame when the sell-off took place. New Zealand just New Zealand index just completely going away from all the other currencies, clearly denoting that the New Zealand is getting weak. And because I'm tracking the daily time frame and I am tracking currency strength and weakness on the smaller time frame, and relatively in the last few days, it's kind of a hint that you get that this is the currency you should be looking to sell. So even if you're tracking currency pairs, right, and you're not tracking individual currencies and you're simply tracking, let's say, moving average crossovers, and whenever you see a cross, that doesn't mean you simply go and buy or you sell, right? It all depends on, there is a moving average crossover that's happened. Like example here, you would have seen this moving average cross here, right? Maybe somewhere here you've seen that cross, but it is only until this is the cross which happened 23rd October, but it took almost 5th of May, almost after 2 weeks is when this currency, the New Zealand dollar, US dollar, actually took off, right? And you can see to the left here, this was the possible area of resistance, and it, because the buying pressure was so much, that it eventually just took out, and then it just ran away for almost 300 to almost 500 pips from this point. So simply tracking a moving average crossover is not going to do the job. So here you can see this is a crossover, this again is a crossover. Now this is a good crossover because this is the cross when you had a moving average cross, currency started to rise, and you would have clearly seen that the New Zealand dollar would have been the currency which is right on top, and there is a lot of buying happening. So just imagine the opposite of what is happening here. The New Zealand would have been on top, the dollar would have been down, right? So you have a similar scenario here where after almost 3 months, right? So this is the month of November. It is almost March, right? So this is almost 3 months later that this currency really we saw some sell off, and then it entered a range. There was this moving average cross, and it is only today that it really broke out and it started to go down. So now you can see that simply just looking the currency strength and meter is not going to help. What is more important is that you need to, I am using a simple strategy here, which is a moving average crossover, because it's very easy to, it's an easy reference strategy, and it is easy to understand because everybody understands it. But all I'm trying to say is you need to understand how to club your strategy with the currency strength meter. The currency strength meter on its own is of no use to you, right? For somebody who is, so if you ask me, is the New Zealand dollar, US dollar weak? I would say yes, it is weak. But somebody who's looking at it to enter right now, I would say wait, because if there is a pullback that will happen, you will get an opportunity to sell again, right? So you need to know how to blend the currency strength meter you're using with the strategy that you're using. Only then you will be able to really make full use of the currency strength meter that you're using. Now I obviously use a couple of currency strength meters, this being one of them. Then I use another dashboard which really helps me to pick trades here So these are dashboards which some of my members are using, and this is a currency strength meter that even my members use, but I personally like to use it because I get to track multiple time frames, and that way I can see what is really happening in the currency market. And this also, because I'm tracking shorter term time frame like 6 to 12 hours, and then what's happening in the last 3 days, it gives me a kind of heads up of the currency pair that I'm tracking. So in this case, it was a New Zealand dollar, US dollar, where I had seen this too, that the currencies had started moving against each other, and I was just waiting to see a breakout. And when that happened, I took the trade. So what did I do? I know this is my reference point, right? So I know what is happening, but that doesn't mean I simply just go and enter the trade. I need to wait. I need to have some patience to see that whether the currency is really going to move in the desired direction that I have planned in my mind, right? So if I am looking at selling the New Zealand dollar, US dollar, then it would make more sense for me to wait. And wait, when I say wait, I simply mean wait till the currencies involved are really moving against each other. That is very, very important, and it's only then when you will look at making entries. And all of this makes sense when you are early in a trend. If you are very late in the trend, it would just not make any sense, right? So what you need to understand here is that first, you need to spend time understanding currency flows, understand which currency is really moving the market. And second, you need to know how to blend currency strength meter with your existing strategy. In this video, I've simply taken a moving average crossover. In this case, it was 9 and a 30 EMA, and I'm simply tracking my strength meter to see and wait patiently that the day the currencies start moving against each other, that is the day when I'll be looking for entry. And obviously, I look at little support and resistance before I place my trade. But the overall logic is that I know which pair to trade, but I am going to wait till the two individual currencies are, you know, um, moving against, or they have just started to move against each other. And that is the possible day when I will be looking for entries, or I would say from there on, I would be looking for entries, right? So if you want to learn more about currency strength and weakness, then you can log on to my website. You can click on Learn to Trade here. There are a lot of articles that I have posted. I will actually be converting a lot of these strategy articles into videos, and I will be uploading them. But if you are keen to read, you can go here. There's a lot of information available on the site. And in case if you are looking to get access to the indicators that I personally use, or these dashboards that I use for trading, then obviously you can, I'll be happy to have you as a member. You can join me, and you have all the information on my website. But I highly insist that you read all the articles that I've written here, because I'm sure it will help you, right? So I really hope that this video is helped you, and you understand now that why it is important that you track currency strength meters. Currency strength meter is only a reference. It's a guide which tells you which currency is strong, which currency is weak. It is only you as a trader, you need to understand, and you need to blend your existing strategy with the currency strength meter. On its own, it is just a reference guide. So here is an example what I gave you today of a New Zealand dollar, US dollar, with the simple moving average. I just have these moving average crossover, and I was tracking this since a few days. The moment I felt that both involved currencies actually started moving against each other, like here, you can see here when the currencies actually started moving against each other, for me, that was the day I would be looking to place a trade, right? So I really hope you like this video. I'm going to leave the link to my website in the description. You can also join me on my free Telegram channel. I keep updating a lot of information about trade setups or what is the currency that I'm really tracking. So I'm sure that will help you. So even that's a free Telegram channel. I will leave the link in the description. I really look forward to see you in the free Telegram channel. And if you have any questions, you can leave it in the comments. I will be happy to reply to you. Thank you. Have a good day. Bye bye.